and I ran the numbers this morning just to make sure I could say this with confidence, and I can. In the past 5 years, Andrew, there have been 15 corrections. And by corrections, I sort of said 10% or more, right? There have been 15 corrections of 10% or more, and the average correction has been 15%. So 15 moves of down 15% on average, and everyone ended up being a buying opportunity. Some took longer than others, to come back, but they were all opportunities to buy, and stocks went on to make new highs after almost every single one of those. So for someone who says, gosh, I have to go back to work, I can't retire. No, that's not accurate. Recognize that markets go up and markets go down. It's not a straight line.
Welcome to Wealthion. I'm your host, Andrew Brill. This is a special episode due to the severe market sell-off on Monday, August 5th. It is the time of the Leo, and the market is definitely roaring in the wrong direction. I'd like to welcome Adam Johnson back to Wealtham. Adam is the portfolio manager of the Bullseye American Ingenuity Fund and author of the Bullseye Brief Investment Newsletter. Adam, thanks so much for taking a few minutes today. I know since Friday you've been busy, extremely busy, calming the nerves of investors, watching the stock market implode. So I apologize for my informal nature. I didn't expect to be here today, but the stock market took a little bit of a dump. So what the heck is going on, Adam?
Well, I'll tell you, by the way, it's not just my investors' nerves I've been calming. It's my own nerves I've been calming. I mean, it's been intense. I woke up this morning to, as we all did, see Japan down 12%. Imagine an entire market down 12%. To see our futures down as much as they were, 6, 7, 8%. And when the market actually opened at 9:30, I looked on the far side of my screen. I had a number of names down 15 to 20%. It was sobering. And amazingly, within 10 minutes, most of them were only down 6 or 7. And over the course of the day, a lot of them have come back. And now at this point, mid-afternoon, I've got, again, as I look at the screen, 10 names that are green. Wow. And that's what the market's still down 800. So I think what that does is speak to what happens when people panic and they react on the open, as opposed to what happens when they say, oh, just hang on a minute, let's think about this, let's talk this through. Maybe some of these stocks shouldn't go down as much as they've gone down, and maybe we should even be buying a couple of them. So it's been quite a ride so far.
So what happened? The Nikkei obviously started this off down 12%. We've all read the news, worst day since Black Monday of 1987. Yep. What happened there?
So I think it's a combination of things. And the Nikkei was almost like, the Japan index was almost like the straw that broke the camel's back. In other words, if you go back to last week, we were all talking about the rotation from AI stocks that have run a lot to small caps that have still been stuck way under their old all-time highs that actually go back to like 2022, right? So whereas AI stocks have been running, small caps haven't been, then we find out we're going to get rate cuts in September. Well, that's good for small caps. So that rotation was sort of the first thing, I think, that happened. The second thing was that Fed Chair Jerome Powell basically said, yeah, we are looking at September as a point to start rate cuts. And then point number 3 from last week was when the jobs report came out weaker than expected. And everyone thought, oh my gosh, has the Fed waited too long? I mean, we've been worried about inflation. Should we be worried about recession? The answer is no. GDP is still growing 2.9%. And even the Atlanta Fed GDP Now forecast, which is forward-looking, still says we're growing 2.7. So how can you have a recession, which means the economy shrinking, if right now you're growing 2.7%, right? So I don't think that some of these connecting of the dots actions that have happened over the past week or so are necessarily accurate, but I do think it explains why people were on edge here, why they sold on Friday. And then add to that the fact that in Japan, which is always the place to go to sort of hide because the Japanese yen is so stable since there's no inflation in Japan, For Japan to suddenly be off 12%, I think people here just said, you know what, forget it, we're out. And that's an emotional decision. Emotional decisions are never correct. But I think that is why we're down so much on the open. And by the way, starting early this morning, I was getting calls from Dubai, San Francisco, Florida, from clients saying, Adam, should I sell? One client even said, if it's down another 5%, we're going to sell everything. And I said, no, that's when we buy. So, you have to keep those motions in check.
Yeah, I was going to say, Adam, that this seems, it seems to me, knowing you a little bit, that this is a buying opportunity. So what you say to your clients to calm them down and say, look, you know what, this is going to be okay, and let's put a little more money to work here.
I mean, Celestica is now up $2 on the day. I mean, it was down $8, and it's only a $46 stock, right? I mean, Coinbase down 22%. Are you kidding me? Nvidia was down, I think, 17%. Nvidia, and by the way, I think Nvidia at some point over the next 4 quarters, whether it's the next 4 quarters or skip a quarter and then it's the next 4 quarters, whatever, I think they're going to earn $4. And today it was trading at 92, which means on a PE basis, 92 divided by 4, it means it's trading at a PE of 22 times, same as where the market was, and yet it's NVIDIA. So you can buy the market growing 10%, or you can buy NVIDIA for the same valuation, and it's doubling its earnings. I mean, come on. So there were a handful of, and still are, as I look at the screens, only a few hours, after that crazy open. A lot of stocks that just got way too cheap, and that's when thoughtful long-term investors step in. You don't have to be a hero. You don't have to buy a lot, but buy little. Just buy one, and if it works, buy another. And you sort of get yourself into the groove.
So what do you say to the person this is their retirement savings, and all of a sudden they wake up and they're like, oh my God, I have to go find a job?
Yeah, well, no, fortunately they don't. There have been, and I ran the numbers this morning just to make sure I could say this with confidence, and I can. In the past 5 years, Andrew, there have been 15 corrections. And by corrections, I sort of said 10% or more, right? There have been 15 corrections of 10% or more. And the average correction has been 15%. So 15 moves of down 15% on average, and everyone ended up being a buying opportunity. Some took longer than others, to come back, but they were all opportunities to buy, and stocks went on to make new highs after almost every single one of those. So for someone who says, gosh, I have to go back to work, I can't retire. No, that's not accurate. Recognize that markets go up and markets go down. It's not a straight line. It'd be nice if it were a straight line, but it's just not. And if that volatility makes one of our viewers or listeners nervous, then I would say, then reduce your holdings of stock and keep a little more cash on hand, or put it into government securities. But volatility is just part of being a stock investor.
This show is sponsored by BetterHelp. In these crazy times we live in, it's probably the last thing on your mind, you and your self-care. We all deal with it. Work, kids, obligations, bills, you name it. Everything takes priority except you. If you've ever worked out or been an athlete, you've heard the saying, never skip leg day. But how about never skipping therapy day? That's right. I'm talking about taking care of you. Talking to someone who will help ease some of your burden so you can get back to what it is that makes you happy. I talk to a therapist, and it really helps to take the edge off everyday life. Maybe you're going through something and can't really pinpoint what it is that's bothering you. If you need to talk to a professional or thinking about giving therapy a try, give BetterHelp a try. It's easy, entirely online, convenient, and flexible to fit your schedule. Just fill out the questionnaire and get matched to a licensed therapist anytime. Never skip therapy day with BetterHelp. Visit betterhelp.com/Wealthion today to get 10% off your first month. That's betterhelp.com/Wealthion. We've seen this. Obviously, Friday was a terrible day for the market. This morning was also not so good. Market's still down 800 plus points.
Yeah.
Are you seeing somewhat of a bottom? You are a stock picker. You look at the graphs and charts. Is this somewhat of the bottom, or you think there's more to go?
Yeah, I think so. And I tell you why. There are a couple of things I look at. First of all, this morning was the worst open in 4 years. Okay. So you don't see that very often. I'll tell you what else you don't see very often. The volatility index, the VIX, also called the fear index, which is a measure of the prices being paid to go out and buy at the money options on the market. The VIX is used as an input for setting those options prices. So when the VIX spikes, that tells you everyone's buying options because they're scared. Today was the third highest reading of the VIX in history, Andrew. You have to go back 40 years. There were only two other days when the VIX spiked as high as it did this morning. Number one was one of the days in March of 2020 during COVID, the big panic day, if you remember that day. It was horrific. And another is a day back in 2008 during the great financial crisis. Only 2 days in history has the VIX spiked more than it did today. So when I hear statistics like that, coupled with the worst open in 4 years, it makes me think that, emotions have just gotten the best of us. And then I see wonderful names on the side of my computer, down 17, 18, 19, 20%. I mean, come on. So I don't know if you can hear the sirens, but
I do. I do. Someone's not happy about the market today.
yeah, they're trying to rescue all of us who are long. But yeah, when I start seeing things like that, and then when I think about valuations of a company, like Nvidia, I think, hang on, this is time to buy. And by the way, one of the other things, kind of bugaboos that I think bothered people today was the headline, Warren Buffett sells half his Apple position. Well, to be clear, Apple accounted for 60% of his portfolio. I mean, I can't believe Warren Buffett would be so irresponsible as to have let Apple become so big. So he sold half. It's still 30% of his portfolio, which I think is way too big. I don't even have stocks that are 15% of my portfolio. 6, 7, 8, that is max, max, max. And there are only a handful of stocks I've ever owned that have gotten that big. Nvidia is one of them. So that was a headline that freaked people out. Oh my gosh, Mr. Buffett selling Apple. I should sell everything. No, he was doing what smart people do. A stock gets to your target, you sell half. That's what I do when a stock gets to my target. I always sell half. And then I have some money that I can go deploy into a couple of new names that I have found.
Yeah, I did see that headline. It was one of my questions because he sold off half of his Apple, sitting
Yeah.
with over 200 billion in cash. That's ready to go to work. Something tells me that Warren Buffett's going to put that money to work relatively soon because with a day like today, why not? You might as well make chunks of money with that money right off the bat.
I mean, it's crazy when I look at some of the names where they were this morning versus just where they are a few hours later. This morning, and pardon the expression, this morning was a puke. People just, they get me out. And they just throw it out. And I'm sure there were a lot of market orders on the open, which is why so many of those names opened down as far as it, again, I keep saying it, Coinbase down 22% on the open. That's just basically Coinbase falling to a point at which finally there's some bids. So you know what? You throw a bid in down 22, boom, you get hit. And all of a sudden, the selling wave is over because, when selling is exhaustive, by definition, it exhausts itself when it's that extreme. And the other thing is, people like me say, wait, down 22, that's stupid, buy it. You call your trader, you say, go buy a little. How much? Yeah, go buy a little. Go buy, 0.5%. 0.5% of capital. And because you always have your shopping list on the side of your desk, and what are the 4 or 5 names? If right here, if they really get bad, you're ready to go. Great, go put a little capital to work.
Just to calm people's nerves even further, Adam, how much is this the algorithms where when a stock starts going down, there's an automatic computer that says, and it's not a person, it's not someone like you who speaks to their clients, it's someone whose computer saying, uh-oh, this is down X%, sell, and then the next computer says sell, and all of a sudden that 2 or 3% is 15, 22%, like you said. They're all algorithms that are running a lot of this money, not a person.
Yeah, well, pretty telling that the New York Stock Exchange, which for decades, actually a couple centuries, was the home of open outcry, right? Where guys are shouting across, buy me this, sell me that, right? The home of open outcry, and their own study has concluded that as much as 70 to 75% of daily volume is electronic. And that's the algorithms. And you and I have talked about this before, but for the benefit of those who are, say, watching for the first time or need to hear it again, what happens, especially during earnings season, is that algorithms, computers, are programmed to instantly read a press release on a big company name, take an Intel or a Microsoft or something liquid, right? And look at 6, 7, 8 metrics. Earnings are expected to be 34 cents. Revenues are expected to be 28 billion. Gross margins expected to be 58.6, whatever. And the computer compares what's in the press release, because it can read it instantaneously, to what the expectation is. And if any one of those metrics doesn't measure up, boom, the computer instantly shorts the stock, and you no longer need a plus tick. So it's not as though the stock has to tick up before you can short it. The stock can fall, and you keep shorting, and pushing it down. And so selling begets selling. And that's why on some of these earnings reports, like Intel last week, the stock was down 29% on earnings. It wasn't a great earnings report, but 29%, wow. Snowflake, the quarter before that, Delta Airlines, UPS, Ford, they've all struggled with earnings because one or two metrics didn't measure up, and that's the algorithms. So people need to recognize that and not get caught up in it.
So the last word, Adam, a day like today, I almost texted my son this morning, said, don't even look. Just don't even look. Forget about it. Don't worry, because everything was red until this afternoon when things started to turn a little bit. What's your advice to the investor who's just like seeing their portfolio down 10%, 8% over the last few days?
Yeah. Step back and take the long view and recognize that volatility is a part of investing. And, back in 2022, the NASDAQ was down 35%. And I know because I was down more than that, and it was awful. And then last year, I had my best year ever and was up more than that, quite a bit more. And so just recognize that there are good years, there are bad years, but what you want to do is make money over time. And in fact, 2 days out of 3, if you just have long enough to wait, the market is up. So the odds are in your favor by a factor of 2. If 2 out of every 3 days are up, by definition, you should be long stocks over the long haul. And by long haul, that could be a year, it could be 5 years, it could be 10 years, but don't grade yourself week to week or even month to month. Take the long view.
I wish I had those odds at the craps tables. I did an interview a couple weeks ago, and I looked at the VIX, and it was at 12 point something. This morning, I was curious, 46 and change. So yeah, you're right. It was 4x what it had been. So the volatility is definitely there.
Yeah. Oh, yeah. The third highest spike in history. I would argue that defines today as an historic day, and this morning's epic sell-off on the open as something that we should all look at, think about, respect, and realize it's probably more of an opportunity to buy than to sell. You rarely see moments like this, and generally speaking, they tend to mark, if not a bottom on that day, a bottoming process, which could mean that we're sideways for a couple of days and then you come up. It could be later this afternoon, but whatever. I think today was a signal that it was climactic, and there's a bottoming process that's going to be associated with it.
Perfect. Well, you've helped calm my nerves a little bit. I hope you calmed everyone's nerves, and keep up the great work, Adam. Thanks so much for joining me on such short notice.
Oh, you bet, Andrew. My pleasure. Anytime.
That's a wrap on another discussion here on Wealthion. Thank you for joining us. If you need help being financially resilient, especially after today's market downturn, please head over to Wealthion.com and sign up for a free no-obligation portfolio review with one of our registered investment advisors. And remember to follow us on social media for the latest news and information to help you invest wisely. If you could like and subscribe to the channel, we'd greatly appreciate it. Don't forget to hit the notification bell so you can find out when we post new videos to the channel. Thanks again for watching, and until next time, stay informed, be empowered, and may your investments flourish. And if you like this content, please watch this video next.